Welcome to FX Streets. Today we're going to be talking about Polygon almost taking the double wall of support, defending 50 cents. But before we dive deeper into the technicals, please make sure to subscribe to our YouTube channel and follow us on Twitter at FX Streets Crypto to be updated on the hottest trends in the cryptocurrency space. It's a bit of mayhem out there after the inflation print coming from the US. Everybody, or markets at least, were positioning for a little bit of dollar weakness as it was expected that the inflation print would come out lower, or at least a fair bit lower than the previous month, which wasn't the case. It was quite, it was a bit in the middle of the range between what we had last month with 8.5, forecasted 8.1, but we came out at 8.3 for the year-on-year overall inflation. And the problem or the issue with that is that the Fed probably needs to step up its game a little bit in order to maintain inflation and make sure that families and people who are spending money can still keep spending money without paying too much for goods and items. With that comes monetary tightening, and that is no good if you want to invest, because that means then, okay, why would I invest in cryptocurrencies like Matic and Polygon if a stable bond returns me as much as 2%, 3%, maybe even 4%? Why would I then take the risk? So that's a big game changer in the balance in global markets between risk assets and fixed income assets. So there you go, and that is what we're seeing. Since then, we had the pop-up, complete pairing back, and since the 5th of May, a lot of dollar strength coming in, and that is not over yet. Expect this to continue a little bit further. That a little bit is roughly 30% that is still in the tank and in the possibility to drop further from the monthly S1 all the way to the monthly S2 support, and that S2 support falls in line with 55 cents and is as well the high of, one day further, the 11th of March. It has been a while since we've last been there. As you can see, we topped there in March, never came back, only to shoot through, test for support, and then we had the rally throughout 2021. So return there, 30% still of losses to take as Polygon loses more value. It's a bit similar story we saw already with other cryptocurrencies today then. That is that it's trading in oversold territory, but expect bears to sit on their hands as they feel that momentum is in their favor with the dollar strength, with the risk, with investors not putting large chunks of money to work in the markets. So certainly if we see a close below the monthly S1 today, expect then to see a test to the S2 either later this evening or tomorrow, as long as this risk-off sentiment persists. Should there be any favorable tailwinds coming? You might never know. Peace agreement from Ukraine or the Fed's rhetoric saying we're fine the way inflation is going and we will stick to the 50 basis point, which is already priced into the markets, at which investors are still comfortable to invest in the stock market and the cryptocurrencies. Then we could see either a bounce off this 62 or the 54 cent handle, and then a swing back towards that 55-day simple moving average at $1.37. Why it's so important? Because as you can see, since April 6th, it has been trading, just only confirmed once, but the force is there, the downward pressure with the dead cross. So the 55 will be acting as a cap, and it will be interesting to see once price action can ramp up there, if it can break above. But for now, look to the downside, nosedive move towards 60 or 55 cents. That's it for Polygon for today. Please remember to subscribe to our YouTube channel and follow us on Twitter at FX Street Crypto.